So you've been learning about market structure, high highs, high lows. Sounds pretty simple, right? But unfortunately, you're still not getting the results that you're seeking. Well, that's because a lot of traders have a very limited understanding of market structure, or let's say an incomplete understanding of market structure. So in this video, I'm going to be sharing a couple of keys that will allow you to use market structure more effectively so you can get the results that you are seeking. Let's waste no time. Let's get right into the video. A lot of traders struggle when it comes to market structure because you have the theory part of market structure, which sounds amazing. High highs, high lows. If price does this, you do this. Straightforward, easy peasy, beautiful, right? But the live market scenario is quite different. So today I'm going to be going over a theory. I'm going to be going over some complex market structure and some live market example and some of the things that you want to be aware of, the mistakes, the simple mistakes or the simple pitfalls that you can easily fall into if you are not aware. So let's dive into it. So when it comes to market structure, guys, you have a very easy, simple, not complex at all, straightforward. And this is how the market moves. When liquidity comes into the market, this is how it is distributed. Buyers come in, push price to the upside, price creates a high. We get a little bit of retracement. We call that a high low. And then the same thing, more push, high low, high low. And then you have another high. This is how the market operates. When sellers want to come into the market, what they have to do now is they target the lows. You get a break of structure and we go into lower low, a lower high, which we can call a retracement or a pullback, another lower low, a lower high, and another lower low. That is a seller's market. This is how price moves on a day-to-day and will likely move in all markets, stocks, crypto, Forex. We're going to call that currency, commodity, metal, whatever market you're looking at. This is how price is distributed on the larger scale. It's not going to change, right? This is the simple theory, but when it comes to live action, live market, there are some things that are slightly different because the market does not move as beautiful as this example right here. Not all the time, at the very least. So you're likely, as a beginner trader, going to be dealing with what I call complex market structure more often than you would like. And if you don't know how to deal with it, you will lose money. So taking a look. Right, so this is what I call complex market structure. This is what you will likely see on your charts more often than not. And what that looks like is, hey, price creates a beautiful high, buyers come to the market, high lows. Wow, we're in a buyer's market, right? Price is moving up, everything is going well. High highs, high lows, high highs, high lows. And all of a sudden, that's not a high or low no more because this low is taken out. What's happening? Is this a seller's market? Okay, I guess it's a seller's market. So price moves into a lower high, right? Okay, you're anticipating more sells, you sell, boom, lower low. Okay, you're holding the trade and all of a sudden price takes out the previous high. What just happened? I'm so confused. This is not the market structure I understood. This is not the market structure. I've watched multiple YouTube videos and these YouTubers told me, like it's like lower lows, lower highs, whatever it is. So it's like, what's going on? All these trading courses I bought told me this is how I do it. So why is it not working? Right? I need my money back. Maybe that's you. I don't know. But high highs and high lows. Price resumes into the buyer concept and now you don't understand that. So this is what I call a complex market structure. This is what you're likely going to deal with more often than not. And the one thing I want you to understand about market structure, there's actually quite a few things. The first thing is market structure, guys, on its own, without the big picture time frame, without the big picture in mind, you cannot understand market structure because market structure this could be a market structure on the daily time frame. And what that means on the hourly time frame is you will have smaller market structure on the hourly, on the 4-hour time frame as well. And then even smaller market structures on the 5-minute, on the 15-minute, and on the 1-minute time frame. So if you don't have a general perspective of where price is likely going to go on the bigger time frame, it's pointless to try to look at the lower time frame market structure and say you're going to trade based on that. And I think that's the very first step that a lot of traders get into. So if we take a look at Euro, this is a Class A example of a straightforward market structure, right? This is easy money. We're all making money today with this kind of market structure because it makes sense. You can buy a course, you can watch a YouTube video, and you can take a look at this chart and you can be like, wow, I totally understand market structure. That's how I felt when I first started trading. So taking a look at this example here, we got lower low, we got a lower high, boom, lower low, lower high, prices moving lower, sellers are currently in control. Liquidity pushing to the downside, the trend is down, low, low, and then all of a sudden, more buyers want to come into the market, and before buyers come into the market, right, they have to change the direction, so we have a break of structure. And I talk a lot about this because when buyers are in the market, they're targeting the highs. So, right, so high, 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 low, high, 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 low. So the process continues, and with this kind of market structure, it's straightforward. This is a classic trending market. This is a classic market structure. This is what we call easy market. Unfortunately, more often than not, this is not what you will likely see in the market. This is a beautiful hand-picked example of Euro USD. What most traders, when you open your chart right now, before you see this example that is as straightforward as this, you will likely see 10 other market structure that doesn't flow with the whole concept of what we call a simple market structure. What you will likely see is something like this, right? You get price moving down, sellers are in control, and from, if you take a look to the left, we're pushing lower, and all of a sudden we get an influx of buyers coming to the market with a break of structure. Price creates a higher high than any of this high. We now pull back, create a higher low, and then create a higher high. Wow, right? More buyers are coming into the market. You should be a buyer, right? Oh yeah, you're buying probably as price is breaking this high, or maybe you're holding the trade from this place, and all of a sudden you start to see price literally take out this higher low. Well, you thought that the market structure was going to hold, right? Because we're in a buyer's market, but not really. Now you get a break of the higher low. Now what comes to mind is I should prepare to sell. I should be a seller. And while you're looking for price to give you a perfect sell trade, maybe you decide to take a sell trade here and you watch the market literally now break above this high and continue its move to the upside. So that right there is what a lot of traders have to deal with. And the reason why it is because when you're dealing with market structure, guys, you have to factor in the higher time frame. That's number one, the big picture. Because for me, when I first started trading, a lot of these things I suffered from. I looked like I studied market structure, read books, courses, watched a ton of videos. But one thing that helped me was experience, right? The more experienced I got in the market, the more I understood that there's power in the higher time frame. When you can look at a big picture, right, you can understand the little picture. So if you understand that, hey, on the daily time frame, we are trending up, buyers are in control. When you get a move like this on the 4-hour time frame, this is just a pullback, right? So on the daily time frame, this might be an entire move, maybe like 4, 5, 6, 7 candles or whatever that it might be, right? And this is just a pullback, right? So this might be just one candle, one red candle that pulls back into this level before price takes off. So when it comes to understanding market structure, you're not always going to see the simple, beautiful higher highs, higher lows, higher highs, higher lows, that kind of thing all the time. So as a trader, it makes sense to understand the higher time frame. The other thing you want to keep in mind too is because sometimes, there are liquidity grabs in the market. You will have price reaching for liquidity because these are levels where traders will place your stop loss. So The reason why some people will say the market is heavily manipulated is maybe for this reason. Because when you have your stop loss here, you're going in the overall direction of the trend, and price comes down and say, hey, John, it's time for you to get out of the trade. And they stop you out and you watch the market go your way. I can't tell you how many. That's probably one of the most frustrating losses you can take when you're right in where price should be going, but you get stopped out right before the market gets there. It's really frustrating. So if you take a look at this example here, we know that buyers were in control. And all of a sudden we see a big push to the downside. Sellers started to dominate, right? And price creating lower lows and lower highs, lower lows. And then we get this big push to the upside and the high was taken out. Technically, this is a break of structure. So what that means is you should be gearing up for a buy. No, that's not what that means. What you should be doing as a trader is to wait for the second leg. If you don't get the second leg, what I normally say is, if you don't get the second leg, right, in the market, after a break of market structure, you should not do anything. So what you should be waiting for is this, and maybe even this, for you to get involved in the trade, right? Because there is a lot more confirmation. But what used to happen to me is after a break of market structure, I wait for the pullback. You know, price pulls back all the way down here, place my stop loss right here. I go long and I get stopped out because the market is literally just doing what we call a liquidity grab, a stop loss hunt. But overall, it is still following its higher time frame trajectory. One of the things I want you guys to understand when it comes to market structure, because a lot of traders, I understand, struggle with it, and I struggled with it for a long time, is when you are trading market structure, you want to focus on the higher time frame. Right? You want to keep that in mind. Understand that you will have easy market structures, and what you would deal with most of the time is the complex market structure. And that's what you have to learn to master. That's really what you have to learn to study, because the easy, when you find that's easy money, that's an easy trade. So you have to put yourself in a position where you understand the complex market structure. And one of the things I say is, for the rule with market structure is wait for price to guide you, right? Wait for the market structure to shift. Get clear confirmation. Right now, if you get a break of market structure and maybe you placed an order to buy here, what you would have been doing is predicting. And as a trader, I learned that you don't want to predict. You want to anticipate. And that's the video, guys. Thank you for watching. Over the last 8 years of my trading journey, market structure has been an integral part of my trading. And today, I wanted to bring some information to you that will allow you to get a better grasp of it. Hope you found it insightful. If you have any questions, feel free to leave a comment down below. And on your way out, don't forget to hit the like and subscribe button. Hope you're out there living free. I will see you on the next video. Peace.